Hello and welcome to China Shortcuts,
the European Chamber's weekly catch-up on China's business landscape.
This episode was recorded on 22nd July 2026. According to data published by the National Bureau of Statistics on 15th July, China's surveyed urban unemployment rate stood at 5% in June, down from 5.1% the previous month. The average surveyed urban unemployment rate for the first half of the year is 5.2%.
Unemployment among China's urban youth saw a significant drop in June. Slightly less than 15% of people between the ages of 16 to 24 not currently enrolled in education were out of a job, down from 15.6% in May. For those aged 25 to 29, excluding students, the unemployment rate is relatively stable at 7.1%. The rate for people between the ages of 30 and 59 fell 0.1 percentage point to 4%.
While the June data indicates some easing, Xiao Ning, director of the Population and Employment Statistics Department of the Statistics Bureau, highlighted that there is still an imbalance between labor supply and demand, with weak demand for workers in some sectors, underscoring the need for additional employment support. This is something that is already on the government's agenda. The plan to expand consumption during the 15th five-year plan period, released on 13th July by the State Council, includes pledges to promote high quality and full employment. Investment in China's real estate market, an ongoing pain point in China's economy, dropped 18% year-on-year in the first 6 months of 2026, according to data released by the National Bureau of Statistics on 15th July.
At the same time, the decline in China's new home prices showed signals of easing in June, with a number of cities reporting month-on-month increases in new home prices rising to 20, up from 16 in May. This is the highest number of cities reporting an uptick in new home prices recorded in a year. Mao Shongyong, deputy head of the Statistics Bureau, told a press conference on 15th of July that China will continue to adopt city-specific policies and promote the stable and healthy development of the property market. The real estate slump, now in 5th consecutive year, has been a significant drag on China's economy, with its impact not limited to households and property developers. Local governments are struggled too, with their revenue from selling land use rights having halved between 2021 and 2025.
Urban fixed asset investment registered its steepest decline since the COVID-19 pandemic in the first half of 2026. It totaled 22.63 billion yuan in the January to June period, contracting 5.7% year-on-year.
While private investment dropped at a faster rate, down 8.5% from a year ago, state investment in fixed assets also saw a decrease of 2.3% in the first half of the year. A big contributing factor to the continued contraction in fixed asset investment is local government debt. As cash-strapped local governments are putting investment projects on hold.
On 15th July, the National Bureau of Statistics issued a statement highlighting that in the first half of 2026, China's per capita disposable income and consumption expenditure both increased.
From January to June, China's per capita disposable income was close to 23,000 yuan, representing a nominal increase of 5.2% year-on-year and a real growth of 4.2% year-on-year after deducting price factors. During the same period, China's per capita consumption expenditure was a little under 15,000 yuan, a nominal increase of 3.7% year-on-year and a real increase of 2.7% year-on-year after deducting price factors.
The improvements in income and consumption are positive. A sustained real income growth is essential for China's policymakers to address structural issues that are putting a strain on China's economy, including the imbalance between supply and demand and unhealthy competition. On 17th July, French President Emmanuel Macron and the German Chancellor Friedrich Merz co-chaired the 26th Franco-German Ministerial Council in Germany, where they discussed issues pertaining to their bilateral ties as well as to the European Union. At a joint press conference held after the event, they announced that the two countries aim to draw up a joint roadmap by September to address issues ranging from defense cooperation to EU integration. Macron said that the country had never been as aligned on the question of China.
Regarding China, the French president proposed emergency measures and early warning procedures that the Commission can implement to react immediately and protect our industry base. Merz highlighted the EU's growing trade deficits with China, calling for solutions to address the issue, warning that it comes at the expense of our industry.
On 21st July, European Chamber Vice President Gianni Di Giovanni and Secretary General Adam Danett met with the European Commissioner for Energy and Housing, Dan Joergensen, at a dinner hosted by Danish Ambassador Michael Stenbæk Christensen.
Vice President Di Giovanni presented the Chamber's latest Business Confidence Survey 2026. He also shared several recommendations from the European Chamber's Energy Working Group aimed at facilitating China's green transition, which included streamlining cross-provisional power purchasing agreements, enhancing green electricity certification systems, setting sustainable fuel blending targets, aligning methanol with global maritime rules, and opening pilot programs to European technologies. European Union Ambassador to China, Jorge Toledo, also joined the event and shared his view on the EU-China trade and investment relations. Thanks for listening, and don't forget to tune in again next week.
In the meantime, please find useful links in the episode notes.